Yeah, I really do have some big shoes to fill after our last two speakers, so I'm inspired, but kind of related to Vinny's comment about changing his presentation, and I wanted to tear this up and not speak about the economy at all, because a lot of people find the economy boring, but that's my brief. So when I was thinking about this, I spoke to my little brother who's just got back from Babson in the US, where he's done his MBA on entrepreneurship, and I said to Carl, I said, what should I really be talking to a room full of entrepreneurs about? And he said, well, I don't know, uncertainty. They value uncertainty, they love it, and they thrive on it. So I thought, well, luckily for me, the economy and the world's financial markets and so on is pretty uncertain at the moment, so hopefully I can build something around that. I'm going to rip into it. What I do need to say, and it's not up here, is this is it's class advice and it's not personalised information in any way. This is something we need to do these days, and hopefully no one's here watching that I don't have it up on the screen. But however, I won't be giving personalised advice. It's just a snapshot of the economy. So yeah, the economy, uncertainty does remain the order of the day in New Zealand. For every indicator that we have out there at the moment, there's probably an equal and opposite indicator that suggests there are headwinds for the economy. International risks loom pretty large, and they hold the key to to confidence for the future. But you know, just recently, for example, GDP came out a lot stronger than what was expected in New Zealand, so the risks aren't all one way. And what I'm going to do is rip into the just three really quick slides on where the economy is at the moment. And I've chosen the increasing housing prices chart, which you can see from back in the start of, I guess, since the start of 2011, we've had an improving housing market. And I put this up because people do like to feel that the house is going up in value, and it's not widespread right across the economy, but it's certainly in areas it's going well. And happy people spend, and happy people develop and borrow and so on. And most economists, and I'm not an economist, but I know that my economics team or our economics team would probably say that a housing-led recovery is not exactly what the economy wants, but in absence of other things, it's good because it keeps people smiling and it keeps the wealth effect going on and people spend. So the next little chart that we can look at here is dwelling consents, and this is another good story for New Zealand at the moment, where dwelling consents have actually risen above the long-term trend. And BNZ's expecting a solid pickup in that translating through to actual construction activity. We will all say that, well, of course, Christchurch and the rebuild is going to help that out. But even if you take out the rebuild from Christchurch, we know that there's a massive shortage of housing in New Zealand because we know that since the GFC finished in around about sort of 2008, 2009, there's been very little in the way of houses constructed. Yet at the same time, Auckland's grown, New Zealand's grown, and people need somewhere to live. So that has to happen, that has to convert into activity, and even if we take away the dwelling aspect of it, we can replicate that for infrastructure and for other heavy construction. So that's a good sign for the economy. But just to bring us back to earth a little bit really quickly, and this is where the uncertainty comes in, commodity prices, my headline there says, look, due a correction, but I probably should say commodity prices have been through a correction. Since about the start of the year, New Zealand and world prices for commodities have come off quite a long way. We don't see this as a major issue because the BNZ economics view is that it's a correction and an overall bull trend, and we do expect higher prices into the future. And our macro and long-term view is that the goods New Zealand produces, and we'll see this in a couple of minutes, are in high demand, and we were listening to Vinny talk about India and about how fast India is going to grow. Well, that's just huge, and it's great for New Zealand when you look at the makeup of the products that we export. So given we've been talking about economy, I tried to think about a chart that would show and illustrate the economy and illustrate, the uncertainty, and illustrate, maybe I could have put a chart up there about the New Zealand dollar and how it goes up and down and up and down. But this, I think, captures the uncertainty in the economy better than most. The bottom line is where the market thinks the official cash rate is going to be out to 2013. The yellow top line is where the BNZ economics team thinks. So the market thinks rates are going to be cut and not rise and sort of get down to 225 and then eventually head back up to 250 when we go past that chart. But our economists, Stephen Topless and co, we think that cash rate's going to go up. So who's right? Nothing illustrates the uncertainty in the market better than that chart right at the moment. And you've got the traders who are sitting down the bottom there, who are looking at overseas, and they're saying, well, let's put on positions that's going to make us money if rates are cut. And you've got the economists saying, well, hang on, look at the housing market, look at global growth, look at the fact that rates are already so low, and look at the inflationary pressures. They probably do have to go up. So that's, I think, a pretty good illustration of the uncertainty that's there. So the next part I'm going to quickly talk about is some of the trends that we're seeing in the economy at the moment. And I've chosen four, and gladly, luckily for me, I can probably point to the first one. That's going to come around people, and Sarah was talking about people before. We're going to talk about regulatory change, which has impacted what banks can and can't do since the GFC, and what we charge for it, unfortunately. And I'm going to talk about strong growth and demand for New Zealand products, and I think that will probably resonate with a lot of people here and highlight some of the opportunities. And I'll, if I get time, talk about our increasing reliance in this country on what happens offshore. And that's not absolutely the end of the world for New Zealand to be exposed to overseas. So is the labour force drying up, and is labour going to be harder to find? Well, this chart shows us that the annual change in the working age population on the right-hand side is, we're not expecting major gains in that for a long time, out to 2017. And then when you look at net immigration, it's going to remain negative out to 2017 as well. And so we always hear about the ageing population, and the message for New Zealand businesses is that your people will be one of your really, really most important assets. And so what we sort of say to businesses is hold on to your good staff, work to retain good staff, just be aware that wages in the years ahead could well be expensive and could well be going up, and bear in mind that that dynamic's happening around the world as well. So people are going to chase good labour, and this is it's quite an important trend to keep an eye on. The other point that I made about regulation in the banking sector, at least, and since the global financial crisis, central banks all around the world are working a lot harder to make sure that we don't get another GFC. But what that means is, as banks, we need to hold more capital against the assets we have. And if you look back in 2006, the bottom line there is the official cash rate, and the top line is the business lending rate. And back in 2006, I think it's something like maybe 150 basis points. Whereas here we are now, after the GFC, it's out at 4%. So that's a pure reflection on the cost of doing business. And what that means, I guess, for SMEs and entrepreneurs is you need to maybe just think that in the future, what debt cost once upon a time is not necessarily going to cost the same thing. So other forms of capital may well be more important to you. Moving right on though, some probably better news. You can see there that in 2015 you've got China catching up to India in terms of dairy consumption. And on the bottom chart you've got between 2015 and 2025, I think it's a 23% increase in global meat consumption. Taken on its own, it doesn't really mean a hell of a lot, but when you look at the next chart, which shows the spectrum of goods that New Zealand produces, luckily for us, we produce dairy and meat, and we're experiencing and expecting major growth in those two products over the years ahead. I think I've got a comment here that milk consumption in China has gone from 2 litres to greater than 10 litres per person in the last 7 years. And so what better place does New Zealand to take advantage of that? The last kind of trend that I wanted to talk about, I thought about skipping because this talks about traditional measures of growth, and I kind of agree with what Sarah said before that maybe we need to have a different measure, but in the absence of that, New Zealand is exposed to what happens overseas. But I don't have a chart that shows us how exposed we are to overseas, but I do have this chart here that shows between 2012 and 2016, 1, 2, 3, 4, 5 out of 6 of our trading partners are going to experience positive growth. And this is consensus economic data. China is the only one which drops, but we have to put that in context and realise that China's dropping from 10% to 8%. So that's still pretty healthy for an economy that's been clipping along at pretty stratospheric growth rates for the last few years. Where do exports go? They go to Asia and to Australia. And everyone talks about what's going on in Europe at the moment in terms of the European debt crisis, and is that bad for the world's economy, and is it bad for New Zealand? And it's certainly not good, but it needs to be put in context that Europe only sort of contributes to about 12% of our exports. So quickly, what to think about. Financial market volatility will continue, so if you're going to go overseas, you need to sort of be aware that currencies that you might be selling in from one day to the next could be devalued, they could be revalued, and the whole world's economic system, people are really trying really hard to protect their own economies, and they do that through floating exchange rates. So plan for uncertainty there. As I said, have less reliance on the price for debt. So be maybe prepared to put up more of your own equity, be over-capitalised, be over-prepared and be over-liquid. And the last one is a bit of a plug for banks, but it's also, it holds for everybody. Build partnership relationships with all of your suppliers and all the people that you deal with. Let people in and understand your business, and I would say in particular banking partners, because banks will be there to help you through the tough times, and I honestly think the best way to do this is through treating banks like partners. So just to summarise, I do think in the coming uncertain world, and the current uncertain world we're in at the moment, New Zealand's better placed than most economies to be a winner, and the BNZ economists, impressed this on me and said, we've got a stable government, we've got low interest rates, we've got low inherent risk in the economy, and we have low levels of debt with strong balance sheets. We've been through a major period of recapitalisation of balance sheets over the last few years in New Zealand, and while it's not right across the economy, it's certainly on a better footing than it was. So I think the uncertain nature of the future economy and the marketplace will ideally suit entrepreneurs and SMEs. You just need to do your homework, protect your relationships, and learn to adapt. And thanks very much for your time.